Did you know that the true cost of buying a home is far more than just the down payment? Most people think once they have 20% saved, they're ready to buy. But that's just scratching the surface. If you're not prepared for the hidden fees, closing costs, and unexpected expenses, you could end up spending way more than you planned, or even worse, not having enough money to actually complete your home buying process. In this video, I'm breaking down exactly how much money you really need to buy a home and what might surprise you along the way. Stick around because missing these costs could cost you thousands. So for most of you who plan on buying a home someday, you've probably assumed at some point that all you need is a 20% down payment. Whether you're a first-time home buyer or looking for a rental property, the last thing you want is to be blindsided by expenses that can stretch your budget. So let's break down all the payments you'll have to make. Starting off with the most obvious cost, your down payment. Many people believe that if you have 20% of the purchase price saved, you're ready to go. And sure, 20% is a solid number, especially if you want to avoid paying private mortgage insurance. But the reality is, there are options to buy a home with as little as 3 to 5% down. Now, the catch with smaller down payments is that you'll end up with higher monthly payments and a riskier loan, which can mean paying more in interest over time. On the flip side, a larger down payment means lower monthly payments and potentially better interest rates. So, it's all about finding the right balance for your financial situation. But the down payment is only the beginning. Let's talk about closing costs, the hidden price tag that catches many buyers off guard. Closing costs typically range from 2 to 5% of the purchase price, and these are the fees that go toward finalizing the deal. So, what exactly are closing costs? They include title and escrow fees, lender fees, and even prorated taxes. Title and escrow fees cover the companies that handle the property and money. You'll also need to pay for things like appraisals and surveys. These help the lender confirm the value of the property and make sure your land boundaries are accurate. For example, let's say you're buying a home for $300,000. You can expect to pay around $9,000 in closing costs. That's on top of your down payment. And if you're putting 20% down, that's $60,000 for the down payment plus another $9,000 in closing costs, bringing your total to $69,000. And that's just to get started. Next up, we have the earnest money deposit. This is essentially a deposit you put down to show the seller that you're serious about buying the property. It's usually around 1 to 3% of the purchase price. For example, on a $300,000 home, your earnest money deposit could be around $9,000. Now, here's the good news. This money goes toward your down payment once the deal closes. But if you back out of the deal without a legitimate reason, you could lose that deposit. So, if you're buying $1 million home, that's a potential $30,000 at stake. The next cost you'll need to account for is the appraisal. Your lender will want to make sure the home you're buying is worth what you're paying for it. This appraisal usually costs around $500 to $700. You'll also likely need a property survey, which can run you another $600. These expenses ensure that the property lines are correct and that you're not overpaying for the home. One of the often overlooked expenses when buying a home is renovation and maintenance costs. You might find that your new home isn't exactly move-in ready. Maybe you want to update the flooring, change the paint, or replace old appliances. Cosmetic changes can easily add a few $1,000s to your budget. But what about more significant repairs? If you need to replace the roof or upgrade the HVAC system, you could be looking at anywhere from $5,000 to $15,000. And if you're buying an older home, these kinds of repairs are even more likely. It's essential to factor in a budget for repairs, even if the home looks great at first glance. And also don't forget, when you buy a home, it usually doesn't come furnished. If you're buying your first home, you'll need to budget for furniture and household essentials. From couches to beds to kitchen appliances, furnishing your home can easily run into the thousands. Plus, there are moving costs to consider. Whether you're hiring movers or renting a truck to move yourself, moving can add another $1,000 or more to your budget, depending on the distance and size of your move. So now that you know all these costs, let's talk about what it takes to qualify for a loan. First off, your credit score is crucial. Lenders want to know that you're reliable, and the better your credit score, the better your loan terms. If you have excellent credit, you'll likely get a lower interest rate, but if your credit is shaky, you could face higher rates, or even be denied a loan. Next is your debt-to-income ratio. Lenders use this ratio to determine whether you can afford a new loan. They'll add up your monthly debts like student loans, car payments, and credit cards, and compare that to your income. Most lenders want to see a debt-to-income ratio of 43% or lower. And finally, you'll need cash reserves. Most lenders like to see that you have at least 6 months of mortgage payments saved up in case something happens, for example, like losing your job. This is money that you won't be spending on the down payment or closing costs. It's just a cushion to show the lender you're financially stable. And so, if we put all of this together with an example, say you're looking at a home that costs $320,000. You want to put 20% down, which is $64,000. Closing costs are another 3%, which comes to $9,600. Your earnest money deposit would be about $9,000, which counts toward your down payment. So, in total, you'd need about $73,600 just to get the keys. But that's not all. You'll also need reserves. If your monthly mortgage, property taxes, and insurance come to around $2,000, then you'll need 6 months of reserves, or $12,000, saved up. That brings your total savings goal to $85,600. Now that you know the full picture, it's time to make a plan. If you want to buy a home in 5 years, divide your savings goal by 60 months. For the $85,600, you'd need to save about $1,427 every month to hit your goal. The key here is consistency. Set up automatic transfers to a dedicated savings account so you're building your home fund before budgeting for anything else. This way, you'll be ready when the time comes to buy. Now that you know the real costs of buying a home, you can go in with confidence and avoid those last-minute surprises. If this video helped you understand what it really takes to purchase a home, then don't forget to like and subscribe. Thanks for watching, and I'll see you on the next one.